Okay, now we're going to tackle requirement 2, where we'll prepare the income statement for May. Okay, so there's the headings on top, and we have the information here where we worked all the transactions, and then we dropped in the totals, if you will, for all the columns. So an income statement starts out with revenues. We had 11,600 that you see right there. Now let's show the cursor so you can see it. Okay. Hopefully you can see that, 11,600. So if we slide this down, we've got 11,600. And then we need to back out the expenses. And we just simply list the expenses we had. Okay, now we would actually need to look at what each of these are for and then put them into the various categories. So if you went through that detail, you had rent expense of $2,100, salaries expense of $1,550, advertising expense of $90, cleaning expenses of $780, telephone expenses of $300, utilities expenses of $280, so a total expense of $5,100. And then when we subtract the $5,100 from the $11,600, we wind up with net income of $6,500, and that takes care of requirement 2. Okay, next we tackle requirement 3, which says prepare the statement of retained earnings. Well, a statement of retained earnings lists the title for the month of, right? Because we're covering a month's worth of transactions. And we start off with our beginning balance, which was 0. Retained earnings was 0, and the first thing we did is we invested money into it, but we didn't have any retained earnings up till that point. So we would add in net income, and the net income came from what we solved for earlier on requirement 2. Right? So up here we calculated net income is 6,500. So now we jot in the 6,500. We come up with 6,500, and then there was cash dividends of 1,900. Hopefully you remember the cash dividends were coming from right here, this column, right? And we're able to calculate what retained earnings were at the end, and that takes care of requirement 3. Next we work on requirement 4, which asks us to put together the balance sheet. And we will need that ending retained earnings that we just calculated. Now, let me slide up to produce the balance sheet. Now what we do is we figure out what's the balance in our assets, 46,270, office equipment of 1920, and we jot those in under assets, right? There's our office equipment and our cash. We jot in the accounts payable that we had as our balance for liabilities. And then from there we can calculate the common stock, which was the 43.5 that initially was put in, and our statement of retained earnings was 4,600. So we were able to produce 48,190, and retained earnings 4,600 again was the result of adding in the net income. What we produced here on our statement of retained earnings. We just calculated the net income less the cash dividends, 4,600. When we put all of that together, we get the balance sheet that you see right here, and it all balances. Okay, then finally we want to tackle requirement 5, which says to prepare the company's statement of cash flows. And again, a statement of cash flows represents the flow of transactions over a period of time. So the title says for the month ending May 31st. Remember that the balance sheet didn't say that. The balance sheet simply said as of May 31st. It's produced at a snapshot in time. It represents the statement of financial position as if the business closed at midnight or the end of business on that day. All right, for the statement of cash flow, now essentially what we do is we analyze what happened in the cash account. Okay, so the cash, we would go through all of these transactions and categorize them. The cash we received from customers would then be totaled, and they totaled 11,600. The cash paid for rent was 2,100. That's this 2,100 right there, right? That was for rent expense. We had a cash payment for cleaning, $780. That was this item right here on the 5th. Okay, then we had cash paid for telephone 300 was which took place on the 30th. And we go through all of them, the cash paid for utilities, cash paid for employees, and we come up with the net cash either provided or used in operations. And in this case, because it's a positive number, we have net cash provided by operations, right? Then we need to consider what were the cash flow from investing activities, and we purchased equipment of 1920, so it shows up in parentheses to show that it's an outflow. So we had net cash used from investing activities, and then we would look at cash flow from financing activities. And I think we only had two transactions. We had the investment by stockholders, which increased cash in the business, 43.5. We saw that as our first transaction. And then the last transaction was the dividends, the 1900. So we show that as a cash outflow to come up with our net cash provided by financing. And once we have that together, we're able to compute the total increase in cash, 46,270. The cash at the beginning was 0. Let me slide this down. So it should end at 46,270, and that matches our 46,270. And we've taken care of this last requirement on this problem, everyone. Thank you.